Hey everybody, good afternoon and welcome to tonight's video. My name is Sami Abusaad. I'm Director of Education at T3 Live, coming on with an important video on how to get the absolute best edge in trading. Well, first, let me start off by asking you a few questions. First, how would you like to be done by 10 a.m.? 10 a.m. How about having an instant watch list that takes 10 to 15 minutes to put together? How would you like to be able to find incredible patterns that you can trade regardless of what the market is doing? How about that? How about being able to trade just the afternoon session or just the morning session? The answer to all of that is gaps. Trading gap, focusing on gapping stocks will accomplish everything I just mentioned. If you don't believe me, let's go ahead and take a look at today's gaps list. Okay, actually we have probably too many gap ups. We had way too many gap ups. Let's take a look at the gap downs. We didn't have as many. Just take a look at the kind of moves that stocks make when they gap. Look at the moves. Now this wasn't the biggest, but that's a pretty healthy, nice move from high to low, from 47 to 45, almost $2. APH. It didn't really move very much. They don't always. This made my day. ARLO. It was the very first thing I traded in the room on the mic and in the afternoon. Look at this. This is what I call Twin Peaks. It's a pattern I identified a long time ago. I call it Twin Peaks because I live in San Francisco and we have a famous attraction called, or site called, Twin Peaks. Look at the ATVI. Look at the nice move from 45 to 43, right? Look at Cat B, same exact pattern, except it didn't have those two horns or two breakout failures. Same exact pattern, Cat B. It was hard to borrow. Otherwise, I would have done the Cat B too. And so on and so forth. I don't want to waste your time because we have important things to cover, right? Sometimes when the stock is a big gap to support, it doesn't actually move. We see that quite often. Okay, but first, gaps generate 5-day moves in 30 minutes or less, oftentimes. Okay, they generate a big move in a short amount of time, and that's the whole concept of time compression. There's also a saying you probably have heard before. Says it goes something like this: "Go where the oil is," meaning go where there is movement, where there's momentum. Gaps create momentum, create movement. Look at this, guys. Initially it was a short and then it caught fire. Show me a stock that wasn't gapping that made this kind of a move. Look at this. $4. No, $5 almost from low to high, right? Or the initial move in the morning. I actually looked at it. I wanted to play it. I was on the mic in the strategic day trader room, but it was too spready, so I didn't do it. I did have a good day. I'll talk about that later. $4,200. But just believe me on this. Gaps create, on average, a 5-day move in 30 minutes or less. That's number one. Number two, if you're into psychology, if you like to read other people's psychology, other traders' psychology, then gaps is something that you should definitely consider, because oftentimes gaps shock people, right? They create shock value. People were buying it. Remember, I don't know if you watched the video that I did yesterday, talked about the TCS, showed you how this was my biggest trade yesterday as a swing. It was actually for today. I held it overnight as an earnings play. It was up, I think, $1,700 just over in the after hours trading yesterday. So watch that video if you wanna see what I did with the TCS. But and I traded it today also. They traded it. But think about it like this. Look at this, guys. Green bar, mostly green bars. People have been buying it. So when it gapped down today, guess what? Those people are trapped. Every single trader. I don't care how big they were, how big they are, how smart, how dumb, how professional, novice, doesn't matter at all. Every single trader that bought it and held it overnight was underwater today, was trapped, right? Was trapped. When you're if you trap a cat in the corner of a room, it will kill you. You couldn't corner a cat, and that's a cat. A human being, when somebody's trapped, you can easily predict what the reaction is gonna be. In this case, they bought it. Next day, disaster. Sell, right? They don't all sell at the open necessarily, but as the stock starts to drop, those that were trying to hold on to it, they see their losses are get bigger and bigger, and they decide to sell, which starts that snowball effect. Does that make sense? So if you're into psychology, which I am very much so, then gaps is something that you should definitely consider. It can be used for day trading, for swing trading. I play earnings also. So this one I was in. I showed you in yesterday's video how I played it as a swing play. So you can use gaps for swing trading. You can also use them for day trading. As I said, I did trade the day trade the TCS. I like to keep my P&L nice and clean like this. During the day I only show the open positions, and then when I do a video and I want to show you my plays, then I can unhide them. But I don't want to, especially if I'm trading actively, I don't want to have to see all of that during the day. So here's the TCS, right? That's pretty good, just from day trading it. Okay. All right. Let me move this out of the way. So if you're into psychology, gaps is something you definitely want to consider. And it can be used for day trading, swing trading. It also can give you an instant watch list. An instant watch list. You just pull up a gap scanner or go to any website that lists like the gaps. If you're in the room with me, I provide that list for you for free, obviously, and I tell you what my favorites are every morning. I type them into the room. The entire gap ups list, entire gap downs list, as well as the favorite gap ups, the favorite gap downs. Okay? So if you just have a list like this, then you can eat off of it all day. You don't need to scan. You don't even need to scan, because this is the gold mine. Why would you want to be looking for something else when you have the best, the stuff that's gonna move? Does that make sense? Why would you want to even scan? You don't need to bother with scanning. In 10-15 minutes at any time during the day, whether you trade the afternoon session, whether you trade the morning only, 10-15 minutes, and you have an instant watch list that you can eat off of, that you can trade the whole day, right? Every single symbol, I'm pretty sure. Now, not everything worked. Some didn't work. Some I just messed up or whatever. Every single symbol on here is going to be a gap. 99% of the time. Every single symbol, 90%, let's just say, of the time is a gapping stock. 90% of the time. Okay? So I focus on gaps almost exclusively. And one last benefit to trading gaps is it's not market dependent. I mean, I don't even know what the market did today. I do. It went sideways, dropped a little bit. But look at this, guys. Let me ask you, really, seriously, did the market go anywhere today? Did it do anything if you tried to trade it? Did you make money trading the market? Went sideways, basically. Didn't go anywhere. That's the cues. The SPY is going to be the same, pretty much, yeah? Sideways. You can still make money. Why? Because gaps are market, they're not dependent on the market. Why aren't they dependent on the market? Because do the people that bought it here, there, the last few days, do they care whether the market is up or down? All they care about is they're freaking trapped and they're in a lot of pain. That's what they care about. So they're going to sell it no matter what the market is doing. Who cares what the market is up or down or going sideways? Does that make sense? So you can trade gaps no matter what the market is doing. Now we like to trade with the market. So if the market is bearish, I'm going to focus on playing short. Market is bullish, focus on playing long, right? But you don't even need to do that when it comes to gaps, as long as you focus on things on significant gaps. You don't look to play something that's gapping up or down 0.5% that's really going with the market more than anything else. So I like to focus on significant gaps. That's why it's not just about looking up the gaps list and you know and you think, okay, well, I got the gaps list, now I'm going to make a lot of money trading it. No, you need to be able to tell if a gap is pro or novice, because if it's novice, you want to fade it. If it's pro, you want to play with it, not against it. You want to also be able to identify the good from the bad. Not all gaps are created equal. Absolutely. And you want to be able to rate gaps. We have a rating system. I teach a rating system, an objective way to analyze and rate gaps. Okay, so that you can apply the same 5 criteria to every gapping stock. And if it gets a point for all 5 requirements, then it's a tier 1 gap or an A-rated gap. If it gets a point for the 4 out of the 5, then it's a tier 2 gap. Does that make sense? It's a B-rated gap, and so on. So I just want to encourage you to really give this a shot, especially if you're struggling with whatever it is that you're doing. Gaps is just something that can really turn around your career. Uh, I'll show you the one that, and then here's the thing. Once I find something that is working, making money, I focus on it. I played this in the morning. To tell you the truth, I would have made a lot of money if I just held on to it, because I shorted 4,000 shares. But then the spread opened up in the morning, and I don't like spread. I don't like spreadiness. I don't like craziness. I love volatility. I love momentum, no doubt. I want movement. Um, so that you get in, make money, move on to the next thing. But I don't want something that's jumpy, that's spready, that's thin, illiquid, that you can't get out of at the price that you want when it's time to get out. So the spread opened up to 15 cents on this, and this was a 5-cent stock. And I had 4,000 shares. Which one was it? ARLO, I think. Yes, ARLO. So here it is. I did it right at the open, but I killed it. And I was on the mic in the room. I got it at 502. Stop was over 517, if I recall correctly. So I was slightly oversized. I got it at 502. Stop was over 517. I still remember. See this? If you click on the candles and hold down the button, the mouse, then it shows you the high and the low. And if I double click, it's gonna, oh no, it's not gonna stay. Ignore. But so that's how I get the high and the low. Look up in the upper left corner, 517 by 495. So I got it, and I got out of it here. And then later on, it's set up as a bleed pattern. If you don't know what that is, that's my favorite pattern of all time, the bleed pattern. But plus 2 horns, 2 breakout failures, that is. So that was a terrific short this afternoon. Again, very similar to the Cat B, but Cat B was hard to borrow. And so there it is, just a tight base and then a rollover. I mean, the 20 MA caught up, and then it started to hug price, and then it just rolled over. You might think, well, this is only a 20-cent move. Yeah, but the base was only 1 penny. So you short under it, you put your stop above it. It's a 2-cent stop, and it dropped like 20 cents on a $4 stock, right? 450, 480. And that was the AR low. So let's take a look at what else I did. And let me bring it. So I did the TCS, the AR low. I did the PAA, and then as you can see, small BSX. This one I really just botched because of the spread. I just got in, and then I just jumped out in the morning. In the afternoon, it actually was fine, but in the morning, that got me. And that, but notice also, guys, this is the sign of a professional trader. Um, Small losses. When I lose, I try to keep my losses small. This way, it doesn't take very much for me. Small losses. The biggest is 387, right? It doesn't take very much for me to have a pretty nice day, right? The $4,200 off of just two main wins, really, two winning trades, and then the rest are mostly basically break even. In fact, maybe slightly negative. The rest, yes, slightly negative. That's because I try my best to keep my losses small and maximize my winners. So if I find something that's working, then I just go to it, and that's what I do. All right. Well, I hope you enjoyed today's video. That's about all I wanted to talk to you to talk about today. Notice how I show you my P&L, unlike a lot of the fake traders out there that talk the talk, but they don't show you anything. There's a reason they don't. I like to listen to music on YouTube while scanning after the close. And of course, the YouTube and Facebook algos have identified me as a trader. So all I get when I get commercials on Facebook, all I get is trading related commercials. Just about all I get, not all. And and so a lot of them, unfortunately, are fake traders. How do you know? Because they don't show you this. Okay, they don't show you this, and they don't log into their account and live show you their account performance. I do that in the room. Log onto my account live, show my account performance, and this way, you know, you have confidence that what I say is what I do. I'm not just trying to sell you education. At any rate, check the links in the description of the video. I dropped a link to the Strategic Day Trader Room, the Strategic Swing Trader newsletter. If you only swing trade, that's a newsletter or a program you want to consider. And I also dropped a link for Advanced Gap Strategies, which is the course that teaches you how to trade gaps. Okay, it's an incredible course that teaches you how to trade gaps. If you have any questions, reach out to customer service. And if you found benefit in this video, if you liked it, please be sure to hit the like button. Thanks so much for sticking around until the end. I will talk to you soon. Take care, everybody, and best of luck with your trading tomorrow. Good night.